later stage people?
Did you read the WeWork book?
The later stage ones?
I think we're like evading the thing that we're not saying, which is that as much as we all want to believe that we're all doing incredibly, incredibly diligent work, there are a lot of examples where belief trumps logic. And even the smartest people just look past the obvious. And we just talked about 4 pretty obvious examples. In no world should a credible tech investor not be able to do a simple valuation or see a business model and brazenly believe a real estate business is a tech business. At the same time, there should be no world where, you're pitched something that is just so incredibly grandiose from a technical perspective, and the reason you invest is actually because you don't understand it. Because if you did, you'd be more critical. That's fucking insane.
Well, this is the thing, Chamath.
But
people are suspending
these examples that you just brought up are exactly that.
Yes, they're suspending disbelief out of greed, and they're not doing the basic tenets of investing, which is milestones, talking to the customer. These are blocking and tackling.
I think it's more than greed, Jason. It's greed.
There's fraud too.
It's criminal.
It's incompetence.
There's fraud. Let's be honest. There's fraud.
Some of it's fraud. So read the quote. Read the quote from the U.S. Attorney of Manhattan, who said Milton, with respect to Nikola, lied about nearly every aspect of the business. People like that need to go to jail. Okay,
jail, big time.
Jail, big time. The startup world, the investing world, only works if investors can trust the information and the financial statements that are being given by operators, because we have to make decisions quickly. And if they give us bogus numbers, how are we supposed to make educated decisions?
Well, people don't want to do diligence, Sacks. People don't want to do diligence anymore.
We look at metrics. We always look at metrics, okay? We look at, we can do the metrics in one day.
Churn.
We look at ARR, we look at net revenue retention, we look at churn, we look at CAC, and we look at your financials. We can do it in one day, okay? It's not an invasive process. We can decide very, very quickly because we know what numbers we're looking for and how to read the statements we're given.
But question for you. When the founders say, I have a competitive process, we don't want to do all that, has that been happening in today's crazy market where people say the train's leaving the station and we can't do diligence, we don't have time for this? Are you in or you out? Has that happened to you? Has that happened to you in the last 6 months?
In a sense, but we say to them, listen, here's what we need. And if you give us these numbers today, we can make a decision within 24 hours. And there's no reason we can't. And by the way, they have those numbers. And if they say they don't have those numbers, they're too incompetent to be funded because these are all the core SaaS metrics that you should have to be tracking your business. So we would never make an investment without seeing the SaaS metrics for a SaaS business.
Yeah, let me just step in for a second because I think there's 2 camps. One is businesses. Companies that operate a business. And what you're talking about, it makes a lot of sense. You could have looked at the business metrics of WeWork and made an assessment of the quality of that business.
Or Nikola.
Well, on the other hand,
or Theranos.
On the other hand, you have companies, I'm saying not Theranos and not Nikola, because those are not businesses yet. Those are still in technology development. They're deep tech. So what happens is the founder, the CEO, the management team, they put together their own representation of the metrics that they believe should matter. And then they try and show how those metrics translate into value over time. So there's no revenue, there's no customers, there's no profits. What they're saying is we can, in the case of Zymergen, we've got X number of experiments we can run per day. And as a result, those experiments should translate into Y discoveries per year. And those discoveries should translate into Z dollars of revenue per year. And that's where the pyramid gets built. And the same was true of Nikola. The same was true of a lot of these companies where they say, we can do X, therefore we're worth Y. And it's that sort of narrative that investors then say, my God, the story is so compelling. If you're right, I want to believe it. I want to put the money in and I want this thing to work. And therefore I'll fund this thing. And I think that's what we've seen continuously. It started with the clean tech industry, and now we're seeing it increasingly with all of these other deep tech companies.
Theranos.
Magic Leap. And in a lot of these cases, by the way, I will also say,
Nikola.
It's easy to do that, but it shouldn't be a representation that the entire set of opportunities is a false narrative.
Absolutely.
There are many great businesses in biotech that actually do deliver the goods, and they turn into incredible companies.
There's a synthetic biology competitor to Zymergen, who I spent a bunch of time with. I'm not going to say the name of the company. And I asked them what gross revenue was.
Simple question.
What's your gross margin? What's your revenue? What are your COGS? What's gross margin? And I got an asterisk-laden answer.
What does it mean? Asterisk lighting answer.
It's kind of like adjusted EBITDA. Adjusted for what?
Speak English. That's what you got to tell them. Speak
fucking English.
This is like when I would come home, my dad say, "Where's your report card?" I say, "That's interesting. My report card? Yeah, I don't have it. So where is it?"
I passed. And then again, it's still shocking to see the number of people that will still do these deals. And look, maybe it all works out in the end. But I tend to think like if you can't present things simply and you can't explain things simply, that's on you. However, if then you still do that and you still have good intentions, maybe you don't, but then investors toe the line. The problem is there's this momentum thing that happens among investors, as Friedberg said, where the FOMO kicks in and some of the smartest people become some of the dumbest fucking people.
No, they are suspending disbelief like you would not believe in the industry right now.
Well, because it's not their money. I mean, look, at the end of the day, why does it happen? Meaning, how can a Zymergen IPO happen like this?
Or Nikola.
Like, meaning, if you look under the hood in the S1, I was trying to find it in the S1. Was there somebody that actually did like some due diligence into Highline? Clearly not. Was there a synthetic chemist or a synthetic biologist that basically helped? Clearly not. Did everybody say that was okay? Clearly, yes. Did anybody get under the hood of Nikola and actually like look at the engine, make sure the thing worked? I don't know.
By the way, people did. There just were enough people that didn't, that they were able to get a financing done. Right. And I think that's the important point is there's enough people
in the private markets. I'm talking about two public market examples. You're not allowed to have sequester diligence when you're going through an IPO.
Yeah.
It's not how it works.
By the way, I do you guys know the difference between humans and animals? there's one distinguishing characteristic that I think
making tools,
narratives.
It's narratives,
stories. Yeah,
narratives. It all comes down to narratives. Like there are dolphins that can communicate with one another. There are monkeys that sit in a tree and they can warn each other about approaching predators. Meaning that there are other species that can communicate. What humans can do that no other species can do is create a narrative. To create an ethereal belief in something that does not exist and get others to believe in that story. Religion, democracy, the financial institutions, the monetary system, a business like this, they're all the same. It's all about someone saying...
Highline, Nikola.
Yeah, no, exactly. And I think in all these cases...
By the way, this is the Cliff Notes version of Sapiens, everybody.
Yes.
It's Cliff Notes version of Sapiens.
I have a funny Theranos story, if you guys want to hear it.
Let me just finish this one point. Like, there's a fundamental premise, which is humans want to believe. And so when you have a Barnum type person show up, when you have a compelling narrative and a compelling deliverer of that narrative, whether it's a religious leader, or a presidential or a government leader or a business leader, and you want to see what they're selling come to reality, you want to write a check. You want to put your time or your money into seeing that thing come reality.
No. I fundamentally look at you're missing a key point. It's not their money, so stop saying that.
Go ahead.
They would not put their children's fucking education account into these companies. They're putting other people's money. They're putting other people's money. This is the key thing.
Not enough skin in the game.
Employees put their time into these companies for the same reason. People join WeWork.
It is not their money. People trade off money and time all the time.
My point is people will take their time. They're giving up the opportunity cost of working somewhere else to go work at these companies.
David, I really fucking disagree with you here. The reason why somebody goes and works at this company because they believe there's positive signaling from a SoftBank. Okay. Mm-hmm. So these people are smart. They think this money must mean it's real. They think I'm now going to commit my reputation and my time to get options because obviously these folks must have done their work. I'm not making the mistake. And that's the lie. Because those folks are not doing the work.
You're both making sense. There's a group of people. There's a group of people placing bets. Who are placing bets of other people's money, and they're doing it without diligence. I agree.
You would do different diligence. Let's be honest. The Zymergen IPO, the traditional IPO, would have been entirely different if they had to write, if the underwriters were at risk for their own net worth. It would be.
And if their stock was locked up of the management teams for 5 years or 10 years.
I do agree with that point, Chamath. I do agree with the point you're making for sure.
Okay, Sacks, go. Sacks from a boat, go.
Yeah, I'm not disagreeing with Chamath, but the point that resonates with me that Friedberg said is actually the book Sapiens really did impact my thinking as a VC, which is, Yuval Harari makes this point that it's narratives that kind of define, humans, and that's what binds us together in societies. And frankly, the vast majority of narratives throughout human history have just been wrong, but they still worked as
good stories,
binding people together. And I kind of applied that to VC, which is the VC process revolves around a pitch. It's a narrative session where the entrepreneur goes up there, and presents a narrative, and then everyone debates the narrative and decides whether they buy into it. And, after reading Sapiens, I'm like, this whole process, is stupid. How do I get out of a narrative-driven investing philosophy? And that's where I'm back to, look, I understand SaaS. I know what the metrics are supposed to be. I'll still listen to the pitch. I want to hear it, but just show me the numbers first. And at least I can get to a decision that's somewhat grounded in reality, because I think most of what the VC process does is just measure a founder's ability to tell narratives. And that may be correlated with their ability to do marketing, but it's not correlated with whether their idea is fundamentally correct or not.
It's fine in the seed stage. It's fine in the seed stage, I think. Yeah.
I think there will be the least amount of fraud when you either have irrefutable metrics or the investor has to invest their own money.
Yep.
That's the gold standard. Everything else is just, catch as catch can, and you're just going to have a bunch of trash.
Yeah. Here's how I'm handling at the early stage, Sacks, because you get to meet my companies. I have told them to craft their narratives around their traction now, because I know that all this performative stuff is nonsense. So when you meet those companies and they do a 3-minute pitch, it's the majority of it is, here's the product, here's the traction. And I accept people based on traction, and then I give them more money as the traction goes up. And we bet 4 or 5 times on the same company based on metrics. And I tell them all, you're coming to the accelerator, here's $100K. If you want more money from us, we'll keep giving you money if you can grow 10% or more per month on real metrics, period. And we will keep giving you money forever.
Right. And I like these launch demo sessions that you do with us, because now you force them to base their presentation around a chart. So at least I can see some metrics. And the other thing we do, similar to you, is I always start with a product demo. Our motto is show me the product, not a PowerPoint, because the same PowerPoint can describe 10 or 100 different products. It can describe a product that might be great, and it can describe a product that sucks.
Totally.
So show me the product, and now at least I'm grounded in what you're doing, and I'm not just listening to some story.
By the way, I go back to this. I still think that funding narratives makes a ton of sense in the early stage. Seed, yes. I rip in $50K to $5 million checks all the time. I could care less. If it sounds reasonable, I take a punt at it.
Right.
But the minute that I'm writing $100 or $200 or $500 million check, I pay fucking attention.
Yes.
Because it's my money. It's my money. And I go back to this. When it's not their money, you're going to see this thing riddled with fraud. You're going to see cases like this stuff constantly. And the person that pays the price, where I do agree with Friedberg, is the employee, because they mistakenly think that these folks must know what they're doing. But the reality is it's not. It's somebody else's money. They don't really care. They're just doing a job. They want to get paid themselves. And so this is how these things happen.
You guys, let me just give you some specifics on the Zymergen scenario. So they're going to go public, right? Leading up to their IPO, the stock's at $31 in the IPO. So if you're an employee and you have stock options in Zymergen, you have the option to exercise your stock options anytime, which means you buy the stock at your strike price, and then you can sell the stock later when the IPO is over. So a lot of employees, exercise their stock options, meaning they put their own money up to buy the stock at 10, $5, $4, whatever it is. And they actually owe taxes on the difference between their exercise price and the fair market value at the time that they exercised. So if the stock goes public at $30 and they exercise, they got to pay taxes as if the stock was at $30. And then they end up in the situation where they can't actually get liquid. And so there was a lot of employees that got really screwed on this transaction when Zymergen went public, because they thought the company was going to be worth, $10, $20, $30, $40, $50. And now the stock's at $8. And they're going to actually owe money to the IRS, and they paid for their stock option. So it's a brutal scenario when it plays out for employees. And I just feel really bad for a lot of really, really great, smart people that work there that take a massive hit on this thing.
I hired 2 more researchers on my team just to do diligence at the syndicate. And I would say between 20 and 30% of deals that look great when we get under the covers and look at the diligence, we look at the cap table, we look at the revenue, we look at the accounting, we ask them who's doing their accounting, we ask them for bank statements, we ask them for incorporation docs, we ask them for IP assignments. This is like the basic blocking, tackling. 20 to 30% do not pass diligence. And we find stuff that is crazy. I had one founder give themselves a loan, and then we didn't know about it. And then we find out about it later. They did a loan and the company owes them hundreds of thousands of dollars. Had another one where they were presented their revenue as reoccurring, and it was accrual-based. It wasn't accrual-based accounting. It was cash-based accounting. And I'm like, yeah, what is going on here? You're basically lying and you're misrepresenting your company. Don't do that. It's called securities fraud. When you make a representation, don't ever bend it or exaggerate it. Just tell the truth.